All right, Canada, let me hit you with something real. The housing market. It's not cooling, it's cracking. TRREB's April Market Watch report just confirmed one of the biggest year-over-year collapses in home sales in the last decade. And while the headlines keep recycling the word seasonal, the data, it's screaming structural shift. This is the Wise Old Owl Show, where we don't sugarcoat macro data with pastel graphs and hopeful buzzwords. We hit it head on with facts, wit, and yes, a little fire. Let's start with the April shocker. Home sales are down 23.3% year over year. That's not a dip, that's a drop kick. New listings up 8.1%. So what does that mean? Demand is dying and supply is piling up. Buyers are frozen and sellers are getting nervous. And here's the bloodbath across segments. Condo sales down 31.5%. Detached down 22.1%. Semi-detached down 23.1%. And townhomes down 27.5%. This isn't seasonal. It is a market-wide stall. To provide you some perspective on the first 4 months of 2025 versus 2021, in the first 4 months of this year, we have 18,496 sales, compared to 47,213 in the first 4 months of 2021. A dramatic drop of 60.8% in sales activity. Have you noticed the sudden disappearance of realtor posts on social media? Do you think the majority are still in the industry? Prices? You guessed it, down across the board. Average selling price is $1,107,000 change, down 4.1% from last year. The HPI benchmark down 5.4%. Detached homes in the 416 off 6.9%. Condos sliced by 6.1%. The selling price peaked in February 2022 at $1.334 million, according to MarketWatch archives. This month's average selling price is 16% off of TRREB's all-time high. You're not just losing value, you're losing confidence. And in real estate, confidence is everything. What statistics told us this month confirms it. Sales across Ontario are already at 1990 recession levels per capita, worse than the financial crisis. And the pipeline, emptying out. Future supply is collapsing. Condo starts in Toronto and Vancouver, falling off a cliff. Detached new builds, basically dead in Ontario and BC. We're looking at a stall in 2025 and a tightening in 2026. But that tightening, it won't feel like relief. It'll feel like shock. Because when inventory runs dry while buyers rush back, it's going to get messy again, fast. But wait, there's more pain on the way. Rates might eventually come down to the low threes, but mortgage maturity data is blunt. The renewal wave hasn't even peaked. It's coming hard through till 2026. Borrowers renewing at 1.8% fixed rates are about to get hit with 4% and 5% terms. That's a 30 to 40% jump in monthly payments. And most households, they don't have that kind of cushion. The word delinquencies hasn't made headlines yet, but it will. This market isn't broken because of inventory. It's broken because of psychology. Economic data reports drop a truth bomb. When confidence falls, businesses stop investing. Households stop buying. And confidence? It's toast. Bank of Canada's latest report used the word uncertainty 49 times. That's not policy, that's panic. We've got trade war clouds overhead, sluggish GDP outlook, inflation lurking in the corners, and a rental market that's about to get flooded with new supply. Thinking of holding your property and renting it out? Good luck. Building data says record high rentals under construction will hit the market through till 2026. Vacancy rates? They're rising. Rents? Dropping. And here's the killer stat. Population growth is projected to fall to near zero, thanks to drops in temporary resident inflows. That's your demand driver. It's gone. So now you're holding a depreciating asset in a softening rental market while praying for a rate cut. Not exactly the retirement plan you had in mind. All the data has a sober outlook. Sales will likely bottom this quarter. Prices will grind lower or sideways through 2025. Markets may tighten in 2026, particularly single-family homes in Ontario and BC condo market will face a delayed undersupply crisis, but not before 2027 or 2028. The translation, this isn't a crash, it's a controlled burn. And if you're not watching the smoke, you're going to get singed. So who should be paying the most attention right now? Variable rate borrowers. You're hanging on, hoping for 2%. That's fiction. You need a plan now. Investors, watch your cash flow. Cap rates are tightening. Rents are softening. Buyers, your moment is coming. 2025 could be your opportunity to step in before inventory dries up and prices rebound. Sellers, if you must sell this year, get real on pricing. Be aggressive. The buyers are in control, not you. And everyone else, buckle up. The next 12 to 18 months will define Canada's housing market for the next 5 years. Canada, the market is shifting fast. The media, still asleep. Politicians are finger pointing, and most consumers, flying blind. But not you. You're here, you're watching, you want facts, not fluff. So do me a favor, like this video, drop your take in the comments, subscribe so you don't miss the updates that actually matter. This is Vince Gaetano from OwlMortgage. Thanks for listening, and remember, the wise old owl is here to help you navigate through the noise and provide insight to the financial chaos in the current environment. Stay informed, stay vigilant, and together, let's chart a path to financial stability. Cheers.